Hi everyone and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Wednesday the 2nd of March. Now, negative sentiment is still the main theme of markets at the moment. The clear driving force is the Russian invasion of Ukraine and the implications that has for the global economy. The oil prices soared higher through $110 on Brent Crude, and you've got the concerns that you have through the food prices with wheat level prices going strongly higher as well, and the implications that has for inflation going forward. So it's going to be a continued theme, I think, in the coming days ahead. We still see selling pressure through risk assets. We saw another lurch of selling pressure on equities yesterday. The sentiment is still pretty negatively biased this morning. We've got euro dollar breaking down, sterling dollar going lower, you've got gold going higher, all the usual plays, I think, through this time for markets that we've seen where the European assets are getting really hit by the close proximity they have to the conflict zone. So the markets have a degree potentially of distraction today. We've got the Eurozone inflation numbers likely to pick up. We've also got the ADP employment change for the US, but also we have the congressional testimony by Jerome Powell, the Federal Reserve Chairman, and now that could have an impact for the dollar later, because it's likely to be that any questions surrounding the impact on Federal Reserve monetary policy from this Russian invasion is going to be a key factor for the dollar later, so some dollar volatility maybe. Now, the charts we're looking out for today, I've got cable on a breakdown. I'm also looking at the sharp rise in the oil price and how that's going to move continually, and also looking at the breakdown that we've seen on the DAX in recent days. So let's have a look. And onto the Infonox MT5 platform, and we start off with sterling dollar cable, which has been volatile as everything has been, but it's broken down below this 33.50 area of support that we had. That was an old pivot line, and it's decisively broken that yesterday and continued lower today, and it really does, I think, open up the lows of 31.60 area of those December levels that we saw there. And I think obviously the initial support is coming in at 32.68, 32.70. If that gets broken, then you really are looking at the at those lows of 31.60, 31.70 again. And you can see on the 4-hour chart there is a degree of support that comes in at that 32.70, but essentially if that gets broken, that really does open the downside. You can see the resistance overhead now, 34.39, sorry, just in my eyes, at 34.39, and obviously that is the resistance overhead, but essentially any rallies that you're getting on cable at the moment as a chance to sell. You can see the momentum is negatively configured. It's not even oversold on the RSI, so it really does see, I think, a test of that 31.60 level is probably going to be seen in the coming days. As you can see here, that resistance at 34.40 is important. Now, the oil price, wow, the oil price. I mean, I drew this uptrend channel in thinking that that was unlikely to be tested at the top of it, but it's just smashed through it yesterday and smashed through it even more today. Just continued higher, and essentially the market is, it's at multi-year highs since I think 2014, but it's not stopping. It's got the RSI at 84. That's the highest it's been for years. And essentially, you'd argue that what goes up must come down, and the chances are that at some stage it will have a very sharp reversal again. But just for now, it's just not stopping, and there is no resistance overhead. So what is to stop it going further higher? But essentially, this is going to be a market that is remaining very volatile, and then the next move in terms of direction is certainly not going to be just sideways. It's going to be a spike back lower, but for now, it's obviously continuing to move higher. So one with a lot of volatility, a lot of risk in whichever way it gets traded at the moment on oil. And for now, it's just going higher. And finally on the DAX, well, this decisive downside break, the DAX is just a massive underperformer throughout the major markets. Wall Street's an outperformer, FTSE's doing okay, but DAX is just getting hit all the time now. And we can see this downside move. It's actually to the lowest you can see on that since February last year. So that is a 1-year downside break now. I've drawn in a sharper downtrend, and if you sort of go into the 4-hour chart, you get a more of a gauge of this downtrend, lower highs, lower lows, and you've got the resistance that comes in 13,930 to 13,940 area. Sorry, to 1420, 1430. So there is, any sort of rallies are being sold into. There is room for an unwinding move, but essentially even the 4-hour RSI is not that oversold at the moment. So it is a struggle for the DAX at the moment. You need to see a breach of this downtrend to really see a turnaround of this sentiment. At the moment, it's going just one way, which seems to be lower. So it's not good for the DAX at the moment. Yeah, further downside is likely to be seen. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Friday where we'll be looking at the non-farm payrolls report and seeing what impact that will have. So I'll leave you with the Infinix support and resistance table, and I will speak to you then. Thank you very much.